So where we're going to start out here, we'll start with Nike. This is a stock I've personally been buying a lot of shares of recently, and I'm getting absolutely wrecked on it. Down 27.5% on this stock, down $12,000. So this one is hitting me and it's just nailing me right now, okay? So in regards to Nike, where I want to start here is the valuation. So forward P on the stock's about 21-ish, right? Now, obviously, when you think about forward P, it's future projections, right, of where earnings per share is going to go. So it's never a guarantee, but 21, this is a weird situation for Nike because where you look at many stocks in the market, they're kind of valued around here, but the issue is Nike has a freak situation going on right now where their revenues are actually expected to go down over the next few quarters, down as in negative. Now, if you look at an average stock in the market, their revenues are not going negative, but it's Nike on the other side. And so you got this incredible company, incredible brand, one of the most successful companies in the world. So you would assume after this next few quarters, they're going to get it turned around and they'll be an outperformer again. But how do you value a stock like that when they're in this type of predicament where, literally their revenues are expected to go down here in the short term? Now, if we look at the Rona lows for Nike, it was around $60 a share. That was back March 23rd, 2020 in the depths of the Rona crash. Very important area to understand where Nike went down to in that situation because it's about $73 here today. It's the lowest it's been really since that Rona crash now at this point in time. And it just seems like it goes lower and lower and lower. So it's important to understand we could go all the way down to $60 in this baby and we'd be right back down to the Rona crash levels on the stock. Next up here, this is what we're looking at here is 5-year PE ratio, okay? And if we look at the PE ratio of Nike over the past 5 years, guess what? This is the lowest it's been in the past 5 years when it comes to Nike. The PE ratio on this one's about 19 as of right now on a trailing 12-month basis, right? Which literally is the lowest it's been today. Like literally today, the day I'm recording this video. The median is 34 over the past 5 years for PE ratio. So we're massively under where the stock usually trades at PE-wise, but you got to understand it kind of makes sense in a way because, hey, the company's going through tough times right now. Revenues are expected to go negative here in the short term, and so being that that's a situation, you can understand the PE ratio being considerably lower than where it traditionally has been at, right? Now, next up, what I want to show you here is looking at earnings per share. It's expected to be down 43% in this quarter they're about to report. Now, do keep in mind they got a lot of cost-cutting measures going around. So if there's one area they might be able to beat at in this upcoming quarter, it might actually be earnings per share. But the revenue is expected to go down about 10% in this upcoming quarter. And Nike basically said it's going to be down about 10% in their latest earnings. So Nike already had kind of a scare the market event. This latest earnings in terms of the guidance was so bad that it really freaked the market out in a substantial way. And so if you're thinking about kind of on a bullish angle, that's something to be somewhat bullish about. Then Nike at least got that out of the way, right? Now, check this out. This is a problem with Nike is what if, they're expecting revenue to be down about 10% in this quarter they're about to report. What if that 10% down continues for the next few quarters after that? Analysts are expecting only 6.5% down that following quarter, then 2.6% down. But what if the consumer doesn't get better? What if Nike's business doesn't turn around in the short term? And what if they report another down percent number the following quarter, right? And they're like, you know what? We think we're going to kind of be in line with where we were at as far as revenue shrink for the rest of the year. That would be an ultimate panic situation in regards to Nike stock. If you think people have freaked out so far in regards to Nike, that's a whole new level of panic that would ensue if that were to happen, right? I don't expect it to happen, but if it did, I'm just telling you, there'd be a whole other level of panic. So here's the worst case scenario for Nike stock in 2024. Worst case scenario is $50 to $55, which today the stock's about 73, so that would be a lot of downside. But that's if we get this ultimate panic situation. Everybody freaks out, right? On a massive revenue shrink of 10% for the entire year, right? The realistic bear case for this year, in my opinion, for Nike is around $60, $65. We get one last flush in the stock maybe over this next 3 months. We kind of get in that 60, 65 range, and then that's about it. Okay, so that's kind of what I foresee there. Now, with that being said, I'm going to likely buy Nike stock every week for the next 6 to 9 months. Like, it doesn't matter if the stock's 60, 50, 70, 80, it's all a steal deal for a long-term investor like myself. So I'll be buying the stock, pretty much week in and week out. And one last thing I want to cover in regards to Nike specific is brands like On and Hoka. We haven't really seen those brands get hit yet, right? And so it's kind of giving a false illusion that like Nike's in trouble, but these other brands aren't. Not really, okay? You got to understand who's the buyer of Hoka and On products, right? I was at Dick's Sporting Goods recently, and I saw a lady, mid-40s buying a couple pairs of Hoka shoes, right? That's who is really buying this. It's a little upper middle class, 40, 50-year-olds, right? Maybe some in their 30s. That's Hoka and On's customer base. So those ones haven't been as bad hit by inflation because those are smaller brands. So they're more of a niche market. Somebody like a Nike, everybody's Nike's customers. Rich people buy Nike's products, right? People that are, let's call it not in the best financial situation buy Nike products. The middle class buys Nike products. Everybody buys Nikes. They're like a Starbucks of apparel, right? Hoka and On, they're much more niche and they cater much more to the middle class, right? And so that's when you haven't really seen those ones hit as bad because we haven't really seen job losses in that specific group in any substantial way yet. Doesn't mean it can't come over the next 6-12 months, but yet we haven't seen that yet, right? And additionally, on top of that, inflation doesn't hit the upper middle class nearly as much as the middle class and below. Those are the folks that really get hit hard. And that leads us to Lululemon. Now, Lululemon's been a company that for the longest time, they catered to the upper middle class, right? That, prior to Rona, that was honestly who Lululemon's customer base was. It was the upper middle class women, right? And nowadays, it's very different. Lululemon, they now cater to, honestly, all customers of pretty much all income levels, but specifically the middle class now is Lululemon's customer base as well. And the reason they had to do that is you only have so many in the upper middle class that will buy your product. If you want to become a giant corporation and you want to push to a $10 billion run rate on revenue or above, you better make sure everybody's your customer base, or at least the middle class. And so that's what Lululemon had to do. The upper middle class got Lululemon to like a $3-4 billion run rate. But you want to get it up to 10 or so like they did this past year, you got to attract more than just upper middle class folks. You better start attracting the middle class, right? Well, that's great at first, but then if the middle class gets sliced and diced by inflation and eventually they run out of money to spend, then your numbers are going to start looking really bad really quickly, right? And in regards to Lululemon, the stock just continues to fall. It's now under $300 a share, right? And it's not that far away from that 2022 crash price when the market was just getting leveled, right? Back then, it kind of reached $260, $270 a share. It's like you get one bad week with Lululemon stock, next thing you know, you're going to be in the 270s or so, right around that 2022 crash. Now, keep in mind, if we go back to the Rona crash, it was just under $150 a share. So if we went all the way back there, that's about a 50% retracement from where we're at right now. Okay, so just a little food for thought in regards to that, right? Now, for Lululemon, they got two problems here right off the bat, okay? One is analysts are expecting revenue growth to accelerate over the next few quarters when it comes to revenue and when it comes to earnings per share, okay? Now, if that happens, great, but the issue is there's a viewpoint that actually the consumer might be getting weaker as this year ticks on, and if that's true, if that's accurate, oh boy, watch out, okay? Because then Lululemon is not going to show accelerating revenue growth and earnings per share growth. What they'll actually show is shrinking earnings per share and shrinking revenue growth, right? And so that's a whole other dilemma that could potentially happen. And keep in mind, Lululemon's revenues haven't been negative. And look, I don't even remember the last time Lululemon's revenues were negative. Imagine if Lululemon came with a print and somehow their revenues went down in a quarter. That would be pure panic in regards to Lululemon. Now, Lululemon also has an issue here. If you look at Google Trends, honestly, this is looking at the United States, Google Trends for Lululemon, right? It's stuck for the past 2+ years now at this point in time. So clearly interest in Lululemon's products has kind of peaked, at least in the short term. It doesn't mean 5 years from now or 10 years from now, it's not going to be much higher than today. But for at least the moment, and when I say the moment, the last 2+ years, it's completely stuck, right? And I do think part of that, just to be honest, is the consumer getting hit so hard with inflation over the last couple of years, so they're not as interested to spend $100+ on yoga pants when you can get them from a lot of other places for a lot cheaper, right? Worldwide, if we look at Lululemon, we've seen a little pickup over the past 2+ years, but not really the pickup you want to see. Lululemon's expanding more and more worldwide, but I mean, just, you would want to see a lot stronger pickup than that, just to be honest, with Lululemon going more worldwide. Now, that leads us to our next thing in regards to Lululemon. I think of these stocks we're talking about here, this is, one or two of the stocks that are in the most precarious situation because of Lululemon's brand, right? And Lululemon's done well building out their business to about a $10 billion run rate, right? And they did that on the back of not really necessarily standing for anything or really being known for anything other than just, having really good leggings, right? If you think about Nike's brand is like, I'm a top tier athlete, right? That's what they've always wrapped their brand in since like the 1980s, right? They're going to buy out the best athletes in the world. They're going to buy out the best sporting events, and branding is going to be everywhere. And so that's what Nike stands for. Lululemon kind of stands from a white blonde in LA. I drive a used Range Rover, and my hubby makes, $325,000 a year. Like that's Lululemon's brand right there. Okay, I mean, it's just got to be honest with you guys. And so, how does that brand handle a situation where consumers getting sliced and diced by inflation? I don't know. We're going to find out, right? So far, based upon that latest earnings and that latest conference call to Lululemon, it sounds like it's going to be a little trouble. I don't know, man. We'll see, but it's a very precarious time on what happens with Lululemon's brand now, right? So Lululemon, worst case scenario for this year is the stock goes down to $150 to $180 a share, which 150 from here, that's almost 50% down, right? Yeah, that's worst case scenario. This one will get hit very hard. And in order for that to happen, revenues probably got to go negative or maybe very slight growth, and that would cause panic in regards to Lululemon. Now, realistic case, in my opinion, for Lululemon, bear case that is, bear case 195, 225. Let's assume they miss this upcoming quarter. They also guide down. Yeah, you could get this stock to definitely go under 250 and maybe in that 220 range at that point in time, which would be, no fun for Lululemon shareholders. But if you're a buyer for the long term and you believe in that company for the long term, then maybe it's a great buy the dip opportunity, right? Hey, I hope you enjoyed that clip here today. Listen, if you're an investor in the market and you do not feel like you are at a high enough level yet, let's say you understand some things in the market, but there's a lot of stuff that maybe you're watching my videos, you're like, I don't really understand. What exactly is that? How does this work? How do I find if a stock's undervalued or overvalued? How do I understand these financial statements on a higher level? All those sorts of things that you need to understand. I want you to click on the first link in the description down there. That is an application to join my private group, which has access to all my best course curriculums to teach you everything you want to know about this game, and all these things you might not fully understand, it's going to teach you that, okay? Plus access to my Discord community of 6- and 7-figure investors and myself in exclusive videos as well. First link in the description down there. Apply, and once you join in there, say hello to me. Alrighty, this is a once in a 10-year, if not 20-year opportunity in regards to Nike stock right now. The valuation looks very, very attractive on Nike, but let's be very clear, very crystal clear about Nike. This company has gone through many tough times over its history. This is a 44-year history in regards to Nike stock. Check this out. 1984, the stock fell, you know how much? 45%. There was definitely a time in 1984 when you could have thought Nike was done at that particular time, right? Man, that was a big mistake. 1986, the stock fell about 17%. 1993, the stock fell over 43 percentage points. Absolutely incredible to see the stock fall that much, right? 1997, the stock fell over 34%. 2002, the stock fell over 20%. Check this out here. 2005, a 3% fall, but 2008, the stock fell a little less than 20%. But keep in mind, the stock was down way more than that in 2008. That's just where the stock happened to finish the year at. 2016, the stock was down about 17.7%. And then the last few years have been absolutely brutal for Nike in regards to stock price. The stock was very highly valued. We came off of, obviously, 2021, all that stimulus money pumped out there. Plus, you had people cooped up at the home, so they just were spending like crazy. And then we've had the wind down of that over the past few years. And you got headlines like this out there, right? NBC News 2 days ago, NFL apparel partner Nike is dealing with major financial issues. Listen, you hear that and it makes you think, oh my gosh, like what's going on with Nike? They've got major financial issues. Well, maybe if you don't know how to read an income statement and all you know how to do is look at a stock chart. Because let's be very clear, if this is financial issues, people don't really know what financial issues are, okay? This is Nike's latest income statement. Revenues were down a whole whopping 2%. Obviously, Nike, we want to always see the company growing, but it's not growing right now. The revenues are in a declining period right now, right? Gross profit was up 1% year over year for the company. As far as their costs, they brought their cost of business down substantially. Income before income taxes was up 39 percentage points on a year over year basis, and they did net income of $1.5 billion in a 3-month span. $1.5 billion of net income, that's bottom line in 3 months. That means they're making, net income of $500 million a month in the latest quarter. There was a rise of 45% year over year. Diluted EPS was up 50% year over year, and they just paid the biggest dividend ever. Let me ask you, does that look like a company that's in major financial issues? Not quite, okay? And we also got to be very crystal clear about this. We are currently in a consumer recession right now. And you can see this across just about any company you look at, to be quite frank. Anybody that does business with the consumer, and that's our main customer base, these companies are all having a very hard go at it. We are in a consumer recession right now, and there's no debating it. Apple's revenue, their latest quarter they had reported, look at that. Apple revenue down over $4 billion. They're doing $1 billion plus less a month in revenue than they were doing at the same point last year, right? iPhone revenue in the latest quarter for Apple was down over $5 billion. And by the way, they launched all new iPhones. They launched the iPhone 15, and yet the consumers just not in the place to be, when I say the consumer, I'm talking about the majority of the consumer, which is what these big companies really count on. These are global companies, Apple, Nike, Starbucks, all these sorts of companies, right? And the consumer's in a bad spot right now. There's no debating that, right? So when you look at Nike's numbers and you hear their guidance, it's not great, but you got to understand the environment we're in right now, okay? It's not normal for Apple's iPhone revenue to go down $5+ billion in a quarter, right? And the reason this is all going on is the Fed lags have officially caught up to the average person out there in a major, major way. You have the Fed lags catching up, compounded with 3 years of inflation the consumers had to deal with, and that's why these companies are having, tremendous trouble even growing their top line, these big global companies, right? And keep in mind, when it comes to Fed lags, I've been telling you guys, how long does it take for Fed lags to catch up? In terms of after they start raising rates, how long does it hit? 1 to 3 years. And guess what? We're well over 2 years deep now into the Fed raising rates. The Fed started raising rates toward the beginning of 2022. And here we are now at a point in time where, we're in, let's call it mid-2024, and the Fed lags have fully caught up. And they have hurt the consumer considerably along with inflation, right? Now, Nike, guess what? In the great financial crisis, their numbers were also really bad. Their numbers were on a great uptrend prior to the great financial crisis, and then during the great financial crisis, when the consumer got hit by job losses, it wasn't as much consumer being hit by inflation during the great financial crisis. It was really job losses during that particular situation, right? And guess what? Nike's revenues went to very depressed levels, and it was very sad what happened to them with their revenues there in the short term, right? The graph is self-explanatory. It was a tough go at it. But guess what? They made it through. They got out to the other side. And then as the great financial crisis wrapped up and people started to get jobs back and the economy came back, their revenues got back in a good trend again, right? But you could have looked at this company in 2008, 2009 and said, Nike's done. If the economy's in a bad place, it's going to hurt them, right? Lululemon stock is down over 40% this year. So did Lululemon forget how to run their business as well, right? And you got to ask yourself, in a situation like this, who's going to emerge the strongest, right? Is it going to be Nike or is it going to be their competitors? Well, let's think about this. Who's been through this game time and time again? Who's a company that's actually been through these massive recessions before? Who's a company that's been through high inflationary environments before? low inflationary environments before, high Fed funds rate, low Fed funds rate. It's been Nike. They've been through this game time and time again. They know how to react in this game, right? And we know Nike at its core is extremely competitive, extremely competitive. That's their DNA, right? Look at their athletes. I mean, that's the way Nike really operates. So if I had to guess who's going to be the strongest coming out of this consumer recession, guess who it's going to be? It's going to be Nike in the end, right? And there are other companies, we'll see how they compete. But, a lot of these companies have grown up in a time when the consumer was just getting better and the economy was just getting better. And how these companies really react now that they're going to have to go through a tremendously hard time, that's going to be interesting because I know Nike's going to be just fine. I don't know about these other companies. And so the way I'll put it like this in regards to Nike is this is easy buy for the next 6 months. Easy buy. Now, don't expect to make money on Nike stock for the next 6 months. Every share I buy over this next 6 months, I'm not expecting the stock to go up magically in the short term. No, I'm expecting Nike to report disappointing numbers for at least the next 2 quarters. In 2025 and beyond, that's when things start to get much more exciting around Nike. Why do things start getting much more exciting for Nike in 2025 and beyond? I'll tell you exactly why. 2 reasons. 1, 2025, we should see revenues get in a better place. So I know the revenue is very disappointing here in 2024, but the revenue should get in a better place in 2025, right? There's going to have very easy comps to comp against on a year-over-year basis for that revenue line item. That's phenomenal, right? And we know they got a ton of innovation coming in the market. Second key point here in regards to Nike and why let's call it the company's going to be looking very good in 25 and beyond. They're doing a bunch of cost-cutting measures in the business model. These are all cost-cutting measures that are really going through for the most part in 2024. There's going to be more coming in 2025, but a lot of it's going through this year. And those cost-cutting measures are going to help that bottom line. You can already see it in regards to their results. Never mind what you're going to see a year from now in 2025. So it's an easy money buy. I'm not expecting to make money in this stock in the short term, and that's perfectly fine. That's perfectly fine. It's, this stock will be a $200+ stock down the road, okay?